Hello traders, welcome to our weekend analysis. Today is November 10th, Friday, almost midnight Eastern Standard Time. So this week, as we mentioned in Monday video, it was very quiet. As you can see from the economic calendar, we also had a daylight saving shift from Sunday, and then basically didn't really have much going on except Wednesday when the RBNZ came out with some surprise hawkish comment. But other than that, the market is generally in a very trending range bound price actions. And of course, Friday is also a US bank holiday today, so very thin liquidity. So let's get into it. So as I mentioned, really aside from the RBNZ, most economic calendar happened this week did not provide too much volatility. The market basically is trendless, couldn't find a general direction. Now, right now, the headline is, of course, Donald Trump is in an Asian tour. But again, what's awaiting, what excites people right now is this tax cut bill. And this tax cut bill, again, it runs against, it's still in the Congress. And right now it seems to be delayed again. So market is quite disappointed. If you look at DAX, which is the US dollar currency, from beginning of this week, we didn't really have any higher trend. Everything was basically, aside from you touching 95 from last weekend, and then everything is just in a downhill. So it's still not too bad because overall you're still in a sort of an uptrend. It's still just a retracement. For US dollar, don't forget, you still have a December possible rate hike from Federal Reserve to be a good catalyst. So there's still gonna be buyers priced in for that. You also still have this tax cut bill that might get passed. If it does get passed, US dollar will have another round of boost. Now, on the contrary, if this tax bill does not get passed, then pretty much the new Trump administration will have no significant policy for 2017. That will be quite disappointing for the market overall. So that's something to keep in mind. And aside from that, British pound was also something more interesting. When I say interesting, just because it has more volatility. Right now, British pound, many of you know, since last Bank of England event, we have a very strong selling from here. But right now, it seems to be recovering again. So what's going to determine the future price of British pound? Right now, it's geopolitical tension from the Brexit. That's still gonna be a headline for British pound. Now, second thing is have to watch out for the inflations, because once again, the only reason or only evidence for Bank of England to hike interest rate again is if the inflation is really out of control, and that will be the most probable case. In terms of how they hike interest rate. Because if you say, okay, they're gonna hike interest rate because their GDP growing so well, or because of their retail sale, or their employment data is great, all those things are probably not going to happen, or is not going to be too positive to a point that Bank of England has to hike interest rate. So right now, watch out for the inflation data for British pound. Will give you future sort of indicators for whether they might have a probability to hike interest rate. Then again, I understand the market always function on buying this kind of sentiment. So I kept repeating myself that trading is a game of speculation. So you're not really trading the fact. The fact is important, but what you want to know is how traders are anticipated and reacted to that fact. So what driving the price action, the sentiment, is people's anticipation and reaction to a certain catalyst. That's what you need to understand and to analyze. Now, euro is somewhat flat, really not much going on since the ECB did cut the quantitative easing, but again, there's no other significant boost that the market was looking for, and that's why euro dropped significantly after the ECB meeting. And right now it's pretty much trading still in this kind of sentiment. So I wouldn't say euro is particularly weak, especially you have to understand it's still doing well fundamentally. But in comparison to other central banks, it did have less hawkish sentiment, and because of that, it will play a much less favorable position in terms of currency pair. And Japanese yen and Swiss franc, these two safe haven currencies, pretty much the same. We didn't have anything much going on, and they are still both fundamentally weak currency. Aside from that, something to mention is the oil market. And of course, whenever you mention oil or commodity, you have to think about Canadian dollar and Australian dollar. Now, oil market has a huge boost basically over the weekend, for last weekend, and huge boost, and basically it actually stay at this level. Now the reason I mentioned in the Monday video was coming from the political turmoil in Saudi Arabia. So basically right now market is worried that the supply might be disrupted. So again, anything to do with the supply and demand, whenever you have a less supply, it seems to have more demand. Now, as I mentioned, because this kind of sentiment is a political driven, that means we don't know, no one knows how long it's going to last, how sustained it is. So that's something you have to keep in mind. But second thing that's more have a more sustained fundamental strength is the fact that OPEC is looking to extend their supply curve. Now, if that's the case, that will be a much sustained sentiment for oil market. But aside from all this, Canadian dollar itself is still strong. I know many of people looking at Canadian dollar thinking that it had dropped significantly, and that's certainly true, especially if you just zooming and looking at this trend. And the reason is because, again, market was disappointed that the Bank of Canada did not hike interest rate further, and basically they are not going to hike interest rate anytime soon in 2017 and perhaps 2018. Really depend on how the data play out. But people kind of overlook the fact that the overall economy in Canada is doing very well. It's in fact the highest gross GDP in 2017 among the most developed countries. So if you zoom out, looking at Canadian dollar, it still is a sort of uptrend for Canadian dollar. So it's a downtrend for dollar CAD. So it's really just right at this retracement, to be honest with you. So and I'm talking about dollar CAD. So dollar is also one of the strongest currencies. So just imagine if you're looking at other thing like CAD yen, it's still very well supported. You're still in a general uptrend. So that's something to keep in mind. Canadian dollar is actually something I'm still interested to buy. We just need a better catalyst, because what happened is right now the central bank is very data driven, but previous data, especially last time, I think the GDP was a miss 0.1%. Now employment data was not bad. You have a better employment number. However, you also have a high unemployment rate. So these two really just mix out. So I wouldn't say this is particularly bad, but we do want to see something that's a good catalyst, maybe perhaps a better CPI, something like that, to drive Canadian dollar further. Excuse me for that. And same thing for Australian dollar. Australian dollar this week we did have the monetary. Wait a minute. Sorry about it. This week we did have the rate statement, and of course everything is kept unchanged. But again, the reason Australian dollar is negative sentimentally is not because anything that's particularly bad in their economy. The reason is because their central bank is in no hurry to hike interest rates. So you have to understand currency trading is always in comparison. So the fact that one central bank is in a hiking cycle and the other one is not, that alone is a good enough bias for one currency to be stronger than the other. So that's the case for Australian dollar right now, because the central bank is once again they say they are not in hurry to hike the interest rate, and that put them in a more of a dovish, more of a bearish currency. But of course, because the commodity market is still quite well supported, as I mentioned, so I wouldn't really sell Aussie, nor would I really buy it. It really depends on what's the currency you want to buy it against or sell it against. And of course, finally, let's talk about New Zealand dollar. So what happened this Wednesday? New Zealand dollar is quite a, if you look at big picture, it's quite a roller coaster, because you have an uptrend and then you end up a week to the downside. So what happened, first of all, fundamentally, is that the RBNZ came out and actually become quite hawkish. Right? They were saying they're quite optimistic about the future projections. And they're also basically just the new government is much more hawkish. So that it's a quite surprise, especially you have to compare to how the central bank act in the previous manner. And previously, RBNZ is always a very dovish central bank. Now, even when their economy was doing particularly well at the beginning of this year, the government or the central bank still came out and very dovish. So people were expecting a dovish. Again, understand market price action will always react on the people's expectation, anticipation, and reaction. So because people already expect a dovish RBNZ, so in the fact that they actually came out and did not being that dovish surprised the market. So we saw a huge rally in New Zealand dollar for a short-term perspective. I think I have New Zealand here. So that's, see this green candle is where the RBNZ came out. So really just continue going higher. Now, of course, it's not really a big movement, but you have to consider, because this week is a thin liquidity. And New Zealand dollar in general is not really an attractive currency for people to, especially this time, nobody really expect too much change, but the RBNZ actually become very hawkish. But we have a roller coaster switch, 180 degree change. And why? What happened? Well, right after Wednesday, and I think around Thursday or Friday, the New Zealand financial minister came out and make another statement, basically saying that, what happened to New Zealand right now, again, because you have a new liberal government, and the government was trying to have a dual mandate for their future central bank policy. That means they don't want a central bank to just looking at inflation. They want them to looking at employment data as well. So basically, as I mentioned before, that market participants are not really liking this kind of idea that the government has too much control or interfere with the central bank. And the financial minister basically came out saying that he wants or wish that the monetary policy can be loosened more for longer time. So as you know, if the policy is loosened, that of course that means there's no way they're going to tighten the interest rate, no way they're going to hike. So that comment alone dropped the New Zealand dollar, and that's why you saw this kind of huge drop. Now this is really unexpected. I actually personally took a small day trade, just out of the New Zealand dollar surprise. Everything was working pretty well, and then went to bed. Now we have 180 degrees. Now that's the thing, of course, every individual loss is always fine, but you have to understand everything can happen drastically in a financial market. So that's why you always have to have a risk management. You always want to know your risk, and in every single trade you always want to be fine to lose that trade. Now you never ever want to risk something you cannot afford to lose, because that's where the big loss come from. And whenever you have that kind of big loss, there's two catastrophic outcome. First is your actual account. Of course, if you have a big loss because you risk too much, you're taking a hit, your account is diminished, and then you have to make back the money that you lose, which again, if you lose 50% of the money or the account, you need to make 100% just to be break even, right? That's mathematically speaking. But another thing that people overlook is the psychology. Because when you have a big loss, it affects your psychology completely. And I don't care how confident you think you are in your back tasting, or if you don't think it's going to happen, it's going to happen to you, because we are the creature of emotions. So win or lose always going to affect you. Now we're trying to do a lot of things to have a sort of a neutral mindset, through meditation, exercise. And the reason is because if we don't use this tool to help us, generally speaking, naturally, our mind is always very extreme. You're always happy or sad. It's very hard to become this Zen state of mind. That's why it's hard to achieve, and that's why there's so many exercise and tools to help people to do that, to achieve that mental state. But understand, because of that perspective, that's why I always say trading, the hardest part is the psychology. Because of that perspective, your psychology is always going to against you. It's always going to be your biggest enemy. So you have to basically find a way to conquer that psychological barrier. And the last thing you want to do, of course, is to give yourself a sort of a big loss or big win. Why do I say that? Because big win, there's two types of big win. One is you risk adequate amount and then you let your profit run, so you actually win a lot more than what you risk for. That's a good win. That's a good win because the win comes from your risk reward ratio. The bad win is you gambling. You over leverage. You jump in. You think this is a sure thing, so you bet 50% or 100% in one trade. That sounds crazy, and you're right. And you actually right, so you make 100%, 200%. On a hindsight, that might look great on paper on your account, but that set up a very dangerous habit, because next time you're addicted to this kind of reward and you want to have that kind of thrill again. So I personally do not like this kind of big win or big lose. I do like to have a consistent approach. For me, each individual trade really has no saying in my account or in overall performance. So I don't really care each individual trade, but I'm very careful about my approach. Whenever I kick myself is when I have a wrong approach, because for me, having a wrong approach means I broke my own pattern, my own habit, and that is a very dangerous thing, because we are creatures of habit. So once you trade a trade that you are not familiar with, in a style you are not familiar with, then no matter what the outcome is, it's not a good thing to begin with. So what happened to New Zealand dollar is that. And that's pretty much what happened to this week. Really not much to talk about. It's really, really quiet. So let's take a look at next week. Now, of course, over the weekend, you have the ECB Draghi speak. Don't really expect too much going on. I know we have a lot of tension. A lot of people are actually angry at the ECB from their last decision. What happened is that you have to understand, Eurozone, there's so many countries, and every country there's a different economic strength and weakness. So for a country like Germany, of course they are doing very well economically. They want the interest rate to get back to normal. Why? Because they have a lot of retiree people, and these people rely on their pension. The pension is in the government bond, it's in the European bond. So the interest rate directly affect their retirement, affect their savings. A lot of savers. Germany is very similar like Japanese. They like to save. It's very different than American. So again, I understand that's a different culture to drive the market, because whenever maybe Federal Reserve not hiking interest rate, that doesn't mean it's bad for the economy, right? If you have an economy like American, it's very capitalist, it's very encouraging people to have a small business, then that's not a bad thing. But if you have an economy like Japan or like Germany, people are big savers. Now, of course, they want the interest rate to go up as fast as possible. So Draghi will speak, but I really don't think much gonna come out for ECB for this year. And then you have RBA government speak, FOMC. So quite a lot of government speak for Sunday. Monday, let's see if anything happening. Bank holiday in Canada. There's a Chinese data here. So again, if you are Australian dollar trader, you do have to watch out for a Chinese data. And Tuesday, we will see another CPI. So this is, again, very interesting. Now, the expectation is 3.1%. That's even higher than last time. So once again, I don't think we have anything that high for a quite long time. So yeah, right after pre-exit. So this is a good warning sign again. If we have something really 3.1 or even higher, market will once again get excited. That means the inflation is still out of control. Bank of England might have to hike again. That, of course, will increase the buying opportunity for British pound. On the contrary, if you have something 3.1 or below, then means that the Bank of England is not going to hike, especially market already think the last hike is a one and done deal. So this will further emphasize that belief. Then we will see British pound continue to drop. Now again, if you want to trade British pound, you do have to be careful and understand what happened to the pre-exit negotiation. Then you have Carney speaks, Kruda speaks, and Yellen speaks. So quite a lot of central bankers to speak on Tuesday. And let's keep going and see what's anything important. Then again, you have employment data. So again, next week is I think it's quite nice British pound day, British pound week next week. Then the employment data, obviously, if you have a good fundamental data, that's going to be good for British pound. But I wouldn't pay too much attention to this because again, what's going to drive British pound nowadays is either the pre-exit negotiation or the inflation data. The employment, it's important, but it's not gonna create too sustained sentiment. So it's not something as a swing trader that you wanna trade on this or really pay too much attention unless you have something really out of deviations. Then Wednesday we'll see a CPI data from US. Now this will be interesting. Again, I think all countries are the same. The CPI data is the most important data, but particularly for these few central banks, because let's say if you have a great CPI for New Zealand, it's not going to do too much because the central bank has already said they are not going to change anything for now. However, if you have a central bank that's already trying to do something, and what's lacking or what prevent them to do that more action is this one single piece of data, then that makes that piece of fundamental data become even more important. And that's the case for British pound, because Bank of England really is looking keenly on this data. So if you do have something that's completely more than the 3.1%, that will increase the probability for them to hike again. Same as Federal Reserve. If the inflation data can pick up, then the US economy is pretty much booming. Okay, I shouldn't say booming. It's pretty much recovering very, very well. The job employment data has already near full employment. The GDP growth is great. Everything else is looking well. So really, the only thing lagging behind is this inflation, and that's why this is important. If we have a good inflation data, will again boost US dollar. On the contrary, if we don't have a good inflation data, the market will be once again disappointed, and then that will diminish the probability for a December rate hike. And during the Asian session, we have the employment data from Australia. Again, not something too important for a swing trader, because right now the RBA is basically not going to do anything at this moment. So I'm leaning more in a short bias. If we have something that's negative, will be much interesting for me to sell Aussie. I have retail sale for British pound on Thursday, and Carney will speaks again, and then Friday we have the CPI. So again, this will be important for Canadian dollar trader as well. So again, CPI is something Bank of Canada is looking keenly at, and so you do have 3 CPI data coming out from 3 central banks that are already in a hiking or have hiked already. Now, for Bank of England, market expectation or market census is that the last hike was just a one-time deal. However, if the CPI continues to climb higher, we might have a more probability for them to hike again. For US CPI, if we have a good data reading in the inflation, the December rate hike will be much more possible. For Canada, if the CPI can pick up, then although 2017 we are not going to see another hike, but in 2018, people will be more excited for Canadian dollar. On top of that, again, the oil market is a big factor, a big booming factor right now. So that's pretty much what I'm looking at next week. I do see one or two, actually I do see few trading opportunities, definitely more than this week. So if you are in my email subscribers, I will send you a swing trade alert next week if we have any. If we don't have any, that means I didn't see anything. So I don't want to send out low quality trade, right? So you see, this week I was looking to trade New Zealand and hope to send to my member, but because again it's just not sustainable, because I'm looking for a dovish RBNZ to continue selling New Zealand dollar. Now because they come out as positive, like completely changed my game plan. So I'm not interested to do that in a swing trade perspective, because I think New Zealand dollar is still very weak. It's weak for the fact that the market is still very doubt and very hesitant over this new liberal government. And as long as that factor exists, I don't think there will be too much people interested to buy New Zealand dollar for a longer period of time. And I was right. I did took New Zealand dollar trade myself in a short-term trade. Of course, I lost the trade, and I'm glad it's just my own loss, right? Because I, again, don't want to send out a low quality setup to the members. So again, if you're interested to try it out, it's free. Just sign up the email list, you will get the trade alert. Other than that, I'll be back next Monday for another weekly analysis. And if you have any questions, feel free to email me or let me know. Thanks for watching. I hope you have a great weekend. Thanks. Take care, guys. Bye-bye.